All right, welcome back to another trading session. Today's Friday, July 31st. It's the last day of the month, and market is going to open in exactly 5 seconds. So, yeah, let's see what we'll get. The markup session will also be out by now, and the market opened. All right, we have a bullish, strong opening range gap. That means my sell side is actually limited, right? And in the prep, if you saw it, I marked up that I would love to see the buy side being taken out first, and then I would love to look for the sell side. But now with the opening range gap, my sell side is definitely limited to this level right here. That's the CE, right? So I'm gonna mark that. That's the last point I'm looking to short into if we short. Yeah, it looks like we're gonna go up first here. So let's see. So it's just a difficult market, you know. We have the 4-hour and hourly SIB in here. So longing in here is not a good idea at the moment, right? On the other hand, we have that hourly BISI, right? So shorting might also not be the best idea. Higher time frame like weekly and daily is also bullish. So I don't know, 50 minutes is just moving sideways, 5 minutes is moving sideways. So yeah, I don't think I'm gonna trade today, but we'll see what happens. We will see what happens. Yeah. All right. First old daily high taken out, or second if there were two, I'm not sure. 1 hour trend liquidity would be up here as well. The only thing I might be interested in is if we get really fucking strong, right? Like really fucking strong, and then an extreme strength setup into the 4-hour relative equal highs, or maybe even up here if we get there. But we'll see. We'll see if that's the case, or if that's just a Judas and then we're gonna return back into the range. Might also be the case. We'll see. But at the moment, there's really nothing interesting for me. Okay, we took out trend liquidity. So technically we took out all the buy side here, and we could look for the other side of the range, or it's just gonna go higher, taking out 4-hour relative equal highs and mitigate into the 4-hour gap, which was not any of my scenarios. But it's also a lot harder to outline the market correctly when it's like, when there's so many contradicting confluences and biases. All right, first day informed. It looks really strong at the moment. We can probably, where did we open? We opened above. Okay, so we can get rid of this one. 1.5 minutes, we can probably get rid of these as well. I mean, if 10 a.m. closes above these two gaps, then I would be bullish, because then essentially everything is bullish, right? And until then, if we haven't filled these, that might be interesting. But we'll see. What is ES doing? ES went also up. Took out relative equal highs. The thing is, ES is also like in a daily SIBI, right? And it's basically at the CE, so longing there is also not a good idea, I feel like. So, today is not the day. Okay, took out the relative equal highs. Hourly trend liquidity for ES is next. And then we have reached the daily SIBI and no more draws to the upside. So ES has no reason to go higher after that. So I don't know. I don't know, man. Let's check the 15. Is there any important gaps in here? Let's mark up this one here. But it's definitely crazy how the market moved this week. It's wild. I mean, I'm already content with this week too, right? I have like 3R or something, so I'm actually pretty content. It's crazy at the moment. It's wild. All right, 4 minutes till we get a 5-minute BISI. $65, $64. Okay, let's mark up this one. It's hourly SIBI. So this would be the very last draw to the upside here. 15-minute seems as it might act as resistance here a little bit. Again, my extreme strength setup would be if we close below a 1-minute gap and then reclaim it. But in this context, with this 15-minute SIBI, no Judas to the downside, no 5-minute mitigation, I would not take that again, right? That's just not my, like, the conditions are just too, I don't know, ambiguous, let's say. Yeah, because it was the same thing yesterday where I outlined extreme strength setup exactly like this, but only the 15-minute was an hourly SIBI, and it worked out, right? But I didn't take it because the rest of the confluences were simply not there, and that's too ambiguous for me. I don't trade something like that. All right, we close below, and I would also not see any shorts in here, to be honest, because we do have clean draws to the upside. The rest is bullish as well, so I would also not short in an attempt for this to be the Judas and now look for these liquidities in here. I can already see some people shorting that, but I would also not do that. 100% not, at least not yet, you know. Because in 1.5 minutes, we will have a new 5-minute BISI in here. If we invert that to the downside, then I would look for shorts, you know. But just with that one, I don't know. I mean, if we get really aggressive, maybe. But at the moment, I don't know. I don't like that. But we do have these relative equal lows. Okay, we closed below the first AM. That's nice. And that's market open low. It's always a nice draw. Okay, no 5-minute gap. That's actually a good sign. Let's see if we get that 1 minute here. it's getting really aggressive here. Okay, 5-minute close. We didn't get a good gap, so that's actually a pretty good sign here. So now I guess we could look for shorts because that was a good displacement here. I like that. 9:30 open taken out. Next target taken out. Okay, we'll probably get not an entry here. So the lowest point I can short into is this one, the opening range gap CE. But I would never take this, and that was basically the only entry you could have taken, or maybe the one with the first AM. But then the stop would have needed to be at least here, maybe even higher, and then I don't know, a 1-to-1 would have been max. So not a good trade overall. I don't know. I can already see these people taking the setup, but I wouldn't say that this is a good short, to be honest. And again, looking for shorts now is also like, you know, we have that hourly busy still. You know, we do have that hourly busy inside the SIBIs. So just the conditions in general, yes, this is FOMO inducing. And a lot of people want to make money at the end of the week, you know, let me get in on that. But I would strongly advise you against trading conditions like that. You know, an hourly busy inside of an hourly SIBI, never a good idea. You know, never. And then opening range gap is bullish strong, but the Judas was to the upside. We do have buy side draws. Sell side draws are not the cleanest. Everything is contradicting here. Everything, right? We'll see what happens. At 775. But the only thing I have to say is it now matches with the ES, right? ES perfectly took out buy side, and then looking for mitigation lower now. So ES is definitely looking a bit better, right? And these are pretty clean lows here. Asia lows are pretty clean. Oops. Perfectly retested the first London. That's nice to see. We're getting really heavy here. But again, I outlined this market, right? This was my first scenario, taking out the London lunch high and then reversing, looking for the other side. The thing is, we have that opening range gap bullish, we have that hourly bullish. Even though I outlined that market, that might happen, and it does, that doesn't mean that I'm trading it. You know, that doesn't mean that I'm trading it. We're about to hit my daily end point here. Boom, there we go. I'm done for the session already. I outlined marked it correctly, but I was not able to be part of it. Or rather, I didn't want to be part of it, right? Because these are low probability conditions. You have to be aware of that, right? Like, even if these setups work out, that does not mean that this is a good trade. 100%. This does not mean that's a good trade, right? So in these conditions, it's always better to preserve your capital. 100%. All right, 90-minute low here, multiple equal lows. We still do have some interesting levels down here though. So old daily low, that's old daily high, never mind. But the relative equal lows here is a strong draw. The 90-minute low is a strong draw, and the mitigation down here as well, right? So if we close below the hourly on the hourly in 15 minutes, if we close below that busy and get a bit more heavy or heavier, then this might be of interest down here, right? So I'll definitely still wait and check that out. 90-minute low taken out now. closing. Yeah, it definitely looked a lot cleaner on the ES. So there, I would have probably taken the first AM inversion. The liquidity was a lot cleaner, and the levels as well. The gaps, 50-minute hourly was respected. I like that a lot better than on the MNQ today. And the mitigation here is also much clearer. We don't have an hourly support, so it's a lot better on the ES. But I don't trade the ES, so I don't care. Do. And honestly, what makes me kind of mad is seeing all these people on the internet taking trades like that and then saying, "Ooh, it was so easy, ooh, I'm the best." But these are just not, like, simply not conditions you should trade, right? And the fact that they are still working out, these setups are still working out, makes me mad, like hella mad, right? Because these people will burn themselves when they always trade like that, because the market doesn't reward something like that on a regular basis, right? Like, you get burned more often taking trades like that than you actually get a full TP. So this always makes me mad, because the people get rewarded for the wrong behavior. But it is what it is. They'll learn that eventually. Okay, let's check the 15-minute here. 5-minute. Okay, so opening range gap. CE was, here's the high, upper quadrant. CE, that's the lower quadrant. Relative equal lows and Asia lows taken out. There's an old daily high, which we're about to tap. And the opening range gap low is here. So I have this rule that I cannot short in a strong bullish opening range gap further than the CE point, which was this one, right? But if we fill it entirely, then I'm open to look for shorts again, because then the market is really, really heavy, right? If it closes a strong opening range gap, 100%, that means the market is extremely weak at the moment. And I would have still these draws down here with the 4-hour mitigation, right? So now that means it respected hourly SIBI and it respected the 4-hour SIBI. And now it wants to mitigate into this to next week go higher into these levels up here, right? So that's a nice draw for today. And we basically already filled the opening range gap now. So now I'm open for shorts into this level. So this is my absolute last level I'm looking for today. Oops, what was that? Oh. This is the absolute last level I'm looking for. And if it fills that, I'm done for today. And I'm actually definitely proud that I outlined the market like that and still didn't take it because the conditions were just simply not good, But it would have certainly been crazy. So the first AM inversion, stop up here, and then targets at the CE 90-minute, and then maybe a few runners all the way down here. Would be crazy, but the main portion would probably be off here, 7.6. Nothing too crazy. Okay, we tapped the low, so the opening edge gap is now fully filled. 5 minute is about to close. So what would be the optimal situation here is actually 62.25. Actually coming back up, tapping the 5 minute gap, and then coming back down, and then taking a short from there. That would be the optimum, right? Because now we're pretty far extended down, but we'll see. Maybe we'll also get a new 5 minute in here in 4.5 minutes, and then tap that and look for shorts. Would also be fine. But let's see. The ES is also about to mitigate into its bissies. Tap low quadrant. Let's mark some gaps in here. Okay, this is one of those ones very small. I don't use gaps like that. But the market has definitely been moving crazy this week, right? A lot of fucking movement. It's crazy. Especially the FOMC day was wild. Before FOMC, with FOMC, after FOMC. Just a crazy, like, the most amount of movement. You know, so we came all the way back down, all the way back up. So I genuinely didn't expect too much movement for today, right? Because we had already moved a lot, and especially on Thursday we had moved a crazy amount. But the market is still moving, not in the AM, but that's wild, right? That's wild. Let's see, the open was here, so that's 140 points to the upside. And then from here we moved 400 points to the downside. That is crazy. Genuinely crazy. Seconds till the next 5 minute gap. Be a small one, but we could tap that. And for me, the day is not over until we have not hit this 4 hour CBC. So the hourly could lead to us taking out that intermediate term high here, or short term high on the 1 minute. filling that 5 minute and then coming back down and then going for this one might still present a valid short option. We'll see. All right, let's see if we can get that, because this gap that's about to form here would be a great short opportunity for me. Oops. Units. Okay, we tapped the 5 minute. That's nice. Now we just need to invert the first AM to the downside, and then I would be in. Three seconds. Ah, come on. I hate that. And it's so close. Also gonna mark up the CE here already. 10 seconds. Okay, 10 a.m. This, again, it's really FOMO inducing, but it's important to wait for the inversion here. And what's even more FOMO inducing is when we break through, but we didn't close yet, right? Sometimes I enter, sometimes I don't. That's just like a feeling thing, but that's scary, definitely. Just like that, I'm gonna enter. Buy 2. See, we didn't close below. That's oftentimes, that's the, but sometimes you have to take these entries and sometimes you can't. That's the problem. I'm gonna be aggressive here with the stop. Okay, we didn't close below. So I would have to exit again, right? If it doesn't. Just gonna see how it prints here. If we again don't close below the first AM, I'm gonna exit again. Three seconds. Let's get rid of this one. Okay, we close below. So now if we close above again, then I'm out, right? And my stop will stay here for now. I can also mark up the C of this wick here. We had already went below that, so I will cut it to above the gap. Oops. Okay, we'll go break even. Let me take out one. No, not sell, buy. And the second one I'm gonna hold. Nah, come on, I hate that shit. Buy one, buy, put that here. Alright, let's see, come on. Already no risk on a trade anymore. I'm already happy about that. If we hit the low of that candle, I'm gonna cut the stop further. There we go. Come on, get that to me. All right, I'm content. There we go. All right. It was a good one. It was very sketchy here. That sometimes happen, when this happens when we get aggressive. I think, okay, we will go now, and then we close above one more time. then that's really, that's really sketchy. But then we close below, and then that's fine. All right. Very happy about this trade. Let's see if it actually hits the target. But exiting like that, I almost always do that because, if we're just a few points, then taking that risk that it reverses is never a good idea. But there we go. We hit it. So great end of the week. It pays to stay patient, as you'll see. And well, thank you for tuning in, and I'll see you next week. Enjoy your weekend, review your trades, learn from your mistakes, and I'll see you next week. Take care.